$300,000. That is the average benchmark drop on certain Metro Vancouver neighborhoods since the 2022 peak. $300,000 off the sticker. If you're a first-time buyer or an investor looking at these units, the instinct is obvious. Buy the dip. Here's the problem. In 6 specific Metro Vancouver pockets, that $300,000 drop is not the floor. It's the middle of a slide that's still moving. Prices may be continuing to drop in these 6 areas because the fundamentals underneath the price are broken. If you're shopping for a condo, a townhome, or a detached anywhere in Vancouver, you need to know which 6 pockets are on this list before you write an offer. Quick note before I go deeper, I sell real estate full-time in Metro Vancouver. My name is Dan Riley. I write offers and read Form Bs almost every single week. Everything you're about to hear is based on what I'm actually seeing on the ground, not headlines, not doom videos, actual deals, actual buildings, actual buyers. Here's the piece a lot of buyers are missing. Not every drop is a deal. Some are. Some are the market catching up to what a property is actually worth in the first place. When you can't tell the difference between those two things, you can buy a trap. Metro Vancouver pockets are pumping out that exact trap right now. Number 1, Metrotown, Burnaby. The high-rise condo towers around Kingsway and Beresford. Benchmark prices in this pocket are down $250,000 to $300,000 from 2022, which looks incredible on paper, but here's what the sale price does not show you. The investor ownership concentration in these towers is among the highest in Metro Vancouver. Many buildings sit at 70 to 90% rental. That means when rents drop in Metrotown, and they've dropped hard, a huge chunk of the ownership pool starts to exit at the same time. While any building's MLS history in this pocket, 20 plus units for sale in a single tower is normal right now. More sitting as unrented vacant listings, more sellers coming, lower rents, and 2 brand new towers about to complete on the same block per the city of Burnaby's active permits. That's not a market where the discount stops. It is a market where the discount deepens for possibly another year and a half. Metrotown is not a bad neighborhood. It's just the specific high-rise investor stock is starting to break. Number 2, Willoughby, Langley, specifically the townhome stock north of 72nd Avenue. Drive down 208th Street in Willoughby and count the for sale signs. The density is unmistakable. That is because Willoughby had the biggest pre-sale townhome flood in the entire Fraser Valley. Contracts signed in 2022 at $1.2 million, $1.3 million. Those same units are now appraising in the low 900s. Buyers cannot close. The banks will not lend the gap between the contract and the appraisal, so sellers are either walking away from deposits or listing an assignment for whatever they can get. Assignment listings of Willoughby are actively trading below the original pre-sale contract price, which means the original buyer is losing the entire deposit and paying the new buyer to take the contract. That is what a broken pocket looks like, and Willoughby still has more inventory coming. Every single quarter for the next 2 years, more completions hit the market. If you're buying Willoughby now, the comp against you the following month is a distressed assignment, and you just can't win that trade. Number 3, Burke Mountain, Coquitlam. The detached stock at the top of the mountain, specifically newer construction east of Coast Meridian. Peak 2022 pre-sale prices in this pocket were routinely $1,500,000 and up. Comparable properties are now sitting on the MLS in the $1 million to $1.2 million range. $300,000 to $400,000 in equity gone in 3 years. And Burke Mountain is not done sliding. The renewal wave in this pocket is real. A huge chunk of Burke Mountain buyers financed at 2021 variable rates around 1.69%. Those renewals are hitting at 3.79 or higher. That is roughly a $1,500 per month payment jump on a typical Burke Mountain mortgage. Some owners can absorb it, but many cannot. The inventory correction has not fully hit the MLS does, and when it does, prices on Burke Mountain likely drop another $100,000 to $150,000. If you're eyeing a detached in Coquitlam, wait for the second wave of listings because they may be coming soon. Number 4, Grandview Heights, Surrey. You know, a market is stressed when developers start throwing incentives at buyers, and Grandview is where that's happening at scale. Publicly listed developer incentives across Grandview projects in recent months include free legal fees, GST paid in full, $20,000 cash back at closing, 2 years of Strata fees waived, and one project marketing campaign, a free car. That's not a healthy market. That's a market where multiple developers are trying to hit their sales targets at the same time. On the same corridor, with inventory, none of them can move at the sticker price. Grandview had the largest master planned launch density in the Fraser Valley from 2021 to 2024. Every one of those projects is now completing, and buying at the current developer sticker price puts the next incentive round directly against your comp value. Waiting 6 months in Grandview typically saves a buyer between $30,000 and $50,000. It's not an opinion, it's just how developer clearance always works when supply outpaces the demand. Richmond is a story about strata fees, not the sale price. The high-rise condo stock around number 3 road in Canby has dropped $200,000 to $300,000 from 2022. Buyers see the sale price and think they're getting a bargain. Then they see the strata fee, $800 a month, $900 a month. In some buildings, well over $1,000. Insurance in these towers has doubled since 2020. Some buildings have already levied special assessments for envelope work. Some are heading in their next assessment cycle. You're not buying a discount, you're buying an $800 a month bill on top of the mortgage forever. And the foreign buyer capital that used to prop up Richmond high-rise is not coming back in the same way. The federal ban may lift. However, the BC 20% foreign tax isn't going anywhere. Long-term demand for these specific towers is very soft. The discount you see up front does not offset the ongoing cost math. Every month you own it, the math gets worse. Last one, New Westminster. Specifically, the investor condos stuck in Uptown around 6th Street and 6th Avenue. New West has real long-term upside. The SkyTrain works. The waterfront is stunning. The market will recover eventually, but the current investor stock in Uptown is bleeding. Rents in New West are down harder than almost any city right now. When you run the math on a typical 2-bedroom investor unit in Uptown from a 2021 purchase, the original purchase around $680,000 at 1.69% at a variable rate. Rent last year was around $2,800 a month. New market rent to fill a vacancy in this pocket has dropped closer to $2,350. That is a $450 a month drop in income. Then the mortgage renewal, and the same 3.79 adds roughly $400 a month in payment. That is an $850 per month swing on a single unit. Multiply that across hundreds of investor units in Uptown, and you understand why more listings are hitting the MLS in that specific pocket. Forced sale wave might not be done in New West. And buying now means buying above where prices settle in 12 months. Waiting could mean buying much below. So where should you look? The good news is Metro Vancouver is not one market. It is 50. Areas with real fundamentals are having an opportunity drop. East Vancouver, East Burnaby, North Vancouver, Central Coquitlam, Port Coquitlam, and more. North Delta townhomes, older detached in Ladner and Tawasin. These pockets do have real jobs, real transit, real school catchments people fight for, and limited new supply coming. Their price drops are the kind that recover quickly, more like 24 months, not 5 years, and that is where a buyer might want to look at this time right now. And look, wanting a deal is human. I bought my own place because it was a good deal at the time, but specific pockets in Metro Vancouver right now are catching a falling knife. Metrotown high-rise, Willoughby townhomes, Burke Mountain detached, Grandview Heights new construction, Richmond City center condos, and New West Uptown investor stock. And if you're shopping in these areas, you might have 3 options. Wait 6 to 12 months, negotiate hard, or look somewhere else entirely. The wrong deal in the wrong pocket right now costs more than paying full price in the right one. That's the whole video. And lastly, there are 3 ways to work with me on this. If you have a specific Vancouver address on your radar right now, shoot me a text at 604-288-7592. You can send me the MLS number and I can tell you straight whether the pocket is on this list or whether the deal is real. I do have a list of the best listings I vetted personally. If you click the link below, I update it as opportunities show up. 0 blacklist properties on that page. If you want 30 minutes to walk through your specific situation, budget, timing, neighborhoods, mortgage math, you can book a Zoom directly with me at the link below. No pressure, no pitch, just real numbers for your situation. Quick note, this video is a general market commentary, not personalized or financial or investment advice. Every neighborhood has good buildings and bad buildings. The blacklist is my read on the pocket overall. Always run the math on the specific property. Talk to a licensed professional before you sign anything. Thanks for watching, and I'll see you in the next one.